And I know times like this, you just take it slow. I fall asleep in the pillows. She got my heart in a chokehold. And there she goes.
Assalamu alaikum. Hello everyone. This is Liquidity Club by Ahmed Shawi. Today is Sunday, the 19th of November 2023. I'll be doing the weekly market review. So let's get started. Starting with the DXY, as you can see last week was a big down close candle to the downside. We were very close from reaching to the weekly consequent encroachment of this wick, discount wick. You can see that the weekly inversion fair value gap from this candle's high to this candle's low was utilized as resistance. You can see that the high was in a very close proximate to the actual high of last week's trading. Now we have a bearish order block, and we close also below this small fair value gap. Price can go back up. We preferably want to see the bodies respecting the fair value gap. The wicks can overshoot to the bearish order block. Uh, if we close below the weekly cost encroachment, I'll be expecting lower prices we might reach for these relative equal lows. I also want to advise you that you can go to check the live stream that I did on Tuesday last week about CPI. I called it out before price has already went lower. So when price was trading here, I called out that I'm expecting lower prices due to the reasons that I've already shared in the live stream. I'm gonna be sharing some here in this weekly review. Going to the daily chart, as you can see, the sell side liquidity here, the sell side liquidity here that I called the fair value gap that is just below those sell side liquidity. We have a refined fair value gap. I didn't put it here due to the weekly fair value gap. I want to keep the charts clean. So we walked inside the fair value gap and the bearish breaker. We have a bearish breaker here. We have a high, low, higher high, lower low. Price walked. This is one of the reasons that I was calling. I was calling for lower prices, and I was calling why price is going to be on CPI is going to break lower, since we walked inside the internal range liquidity and we accumulated more orders at the bearish breaker, and then we broke lower. Before we break lower, I knew that we were going to breaking lower because pretty much we have swept the buy side liquidity here, and we walked inside the internal range liquidity. So what's left? The external range liquidity that is residing just below this, the lows here, and finally the weekly consequent encroachment. Now, why am I calling it the weekly consequent encroachment if price wants to close below it on a daily time frame, by the way? The one that I've mentioned here, if we close below it, not on the weekly, on the daily, if we get a daily close below the weekly consequent encroachment, I'll be expecting lower prices reaching for this low, these relative equal lows, etc. Because the weekly consequent encroachment is actually the mean threshold of this bullish order block. As an assignment for you, you could be going to the charts, you could be measuring the high to the low. We're getting something very, very close, like within a few pips of the weekly consequent encroachment. So if we close below it on a daily basis, I'll be expecting price to trade even lower to the downside. So I think that's gonna be pretty much it for DXY. Going to ES, here we're viewing the continuous contract and we're viewing the weekly chart. As you can see last week, we have we opened, walked inside the bullish breaker, and then we rallied up higher, closing above the weekly fair value gap. Now, what I'm expecting is price. You can see that we have a breakaway gap that I've called last week, and I've mentioned that I'll be expecting this to be left open as it's a breakaway gap. Now, next week, I'll be expecting price to take out the rejection block. We have a buy side liquidity here, and we have the buy side liquidity here finally. Now we're into a seasonal tendency. It is known that the last month and a half of every year we get this Santa Claus rally in price. And this is in fact what we're seeing here in the last 2 months, roughly, in the markets, or especially in the indices, the US indices. We get a rally due to the Christmas and the holidays. Many people are going to be buying things, and these purchases are going to be translating or resulting in higher prices in the indices. Going to the daily chart, as you can see, we have formed red equal highs. We run them. CPI, this big up close candle is CPI. And then after the up close candle, what do we expect? We expect consolidation, and this is what we got. Wednesday, Thursday, Friday, it was pretty much inside the range from Wednesday's high and Thursday's low. And even Friday was in between those between those two relative levels, the high of Wednesday and the low of Thursday. Now, what I'm expecting is next week we break lower, we take out Thursday's low, flush those people who are buying at this level right there, and work inside this fair value gap, then run up higher for the rejection block and the buy side liquidity. So it's going to be roughly the PO3, the power of three, accumulation, manipulation to the downside, and then distribution to the upside towards the buy side liquidity and the rejection block. You can see that the rejection block also has a buy side liquidity here on the day, because we're viewing it on the daily time frame. So I think that's going to be pretty much it for ES. I'm expecting higher prices, and also I'm expecting, since we closed here above the weekly fair value gap, I'm expecting price to treat the high of the fair value gap as support that can send price higher. Obviously, the wicks can do the damage by maybe creating a fair value gap, or maybe creating an immediate rebalance, although I think it's very far from happening. I'm not expecting that, but we can see price creating an immediate rebalance and then run up higher, reaching to these buy side liquidities, because large funds are setting their buy stops above these highs, and the market, depending on the size and the amount of their liquidity that's resting above these levels, the market's going to be moving either quickly or slowly. So I think that's going to be pretty much it for ES. Moving on to NQ, here reviewing the continuous contract and reviewing the weekly time frame. As you can see, we've sold the buy side liquidity, as I've mentioned earlier. Like when we were here this week, I've called it out that we have a trend line phantom here. Retail are going to be trusting this, and they're going to be selling right there. I connected the lines, I showed you everything. And now here we go. I've been calling out for this buy side liquidity, this buy side liquidity, and this buy side liquidity, and the market is just been delivering. We were very close from reaching to this buy side liquidity. No, we just swapped this buy side liquidity, and then we retraced a little bit. You can see that when it opened last week, we traded lower. When did we trade lower exactly? What is the high of this? What is the high of this candle? We have the bullish breaker, price retraces lower, bullish breaker, support, then run it up higher, taking the buy side liquidity. We have a fair value gap. As you can see, we have a breakaway gap also here, where price has broke away from the weekly fair value gap. We have a fair value gap here. Price can, since it has worked inside the external range liquidity, it can retrace and work inside the weekly fair value gap, which is the internal range liquidity. Also, if it wants to reach, because the basis of the markets, it's moving from discount to premium and from premium to discount. If you're measuring from this low to this high, we have a rough estimation about discount equilibrium, and below the equilibrium is going to be discount. Price can wick and play or work inside the discount before reaching to the rest of the premium levels. So moving on to the daily chart, as you can see, the same thing is mentioned here. We have a low, and the same thing, we were working inside Wednesday's high and Thursday's low. Basically, Friday's being held. Although I was expecting Friday to be showing us a retracement by 20 to 30% of the weekly range, but we didn't get that. So I'm still expecting some kind of a softening in price before actually reaching to the buy side liquidity. So it can take out this low, walk a little bit inside this fair value gap as of a internal range liquidity, and then run up for the consequent encroachment of this high, the premium wick. This could be your target. You always take profits at the consequent encroachment of the long wicks, and then eventually the highs, and you could be holding for this buy side liquidity. That is what I'm expecting from price on NQ. Going to Dow, here reviewing the continuous contract on the weekly chart or the weekly time frame. As you can see, last week was also a big up close candle to the upside, reaching to the weekly consequent of this premium wick. Always, as I've mentioned earlier on NQ, you have to always take profits or book some partials at the consequent encroachment of every long wick. And here we can see it. We close above the weekly inversion fair value gap. This is the fair value gap. After we close above it, it's going to be referred to as inversion fair value gap. Price can treat the high and the consequent encroachment of this inversion fair value gap as support. We also have the bearish order block. Price can also be treating the bearish order block as support before trading up higher. This weekly fair value gap is a breakaway gap. I forgot to mention it here, but this is a breakaway gap. I'm expecting price to run up for this buy side liquidity, these highs in the future. Going to the daily chart, as you can see, I'm also expecting price to be treating the daily inverted fair value gap and the weekly inverted fair value gap highs and the consequent encroachment, because you can see that roughly the daily inverted fair value gap consequent encroachment is the same as the weekly inverted fair value gap consequent encroachment. So we can see price treating them as support before running up higher, taking those buy side liquidity, and eventually if it was really animated to the upside, it can reach up for these highs right there. So I think that's going to be pretty much for Dow. Going to Euro USD, also known as the fiber. Here we're viewing the weekly time frame or the weekly chart. As you can see, big up close candle to the upside, reaching to the wick closement, and we are very close from reaching to the buy side liquidity. We have a bullish order block here, and we also close above the inverted fair value gap here from this candle's high to this candle's low. We have the inverted fair value gap. Price can be treating these as support before running up higher and finishing the unfinished business up there. Going to the daily time frame, as you can see, we have fair value gap here. Price can no, this is a bullish order block. Price can retrace, walk inside of it, or if it was in a rush to reach to the upside to these targets, we have a buy side liquidity here. We have a small fair value gap from this candle's high, from this candle's low to this candle's high. The weak consequent encroachment and the buy side liquidity. The price was really in a hurry, in a rush to be reaching to these levels. It will just treat this as bearish order block on Monday. So the support 3 open, down close candle to the bullish order block, and then rally up higher. That's going to be the manipulation, accumulation, manipulation, distribution to the upside. Or if it wasn't really in a hurry, it can trade lower, take out these lows, walk inside the fair value gap, maybe wick towards the bullish order block here, and then rally up higher towards the buy side liquidity. So regarding that, we have to be monitoring closely to see what price is going to be offering us on the marketplace. That's going to be pretty much it for Euro USD, also known as the fiber. Going to Pound USD, also known as the cable. Here we're viewing the weekly time frame. As you can see, price has closed above the weekly inversion fair value gap, and we have a bullish order block here. Price can be treating the bullish order block and the weekly inversion fair value gap as support that can send price up higher to the drawn liquidity, which is the fair value gap right there between this candle's low and this candle's high. We also have the inversion fair value gap. Price can be using this as targeting purposes, or also the consequent encroachment of this premium wick. Going to the daily time frame, as you can see, we've swept the buy side liquidity here. Price has worked inside the internal range of liquidity, and then if it rallies up higher, we have a potential bullish order block. Price can be utilizing if we trade above it, and I preferably want to see price before taking out this buy side liquidity and trading inside the fair value gap. After trading above it to approximately like this area, Before taking out these levels, it can retrace, work inside the bullish order block, and then run up higher. It's gonna be giving it fuel to run to the upside. So that's gonna be pretty much it. I'm looking for higher prices. Since we've seen price tap into the internal range liquidity, I'm expecting it now to tap into the external range liquidity. I just want to state out that if you want more information or you want more details or insights about why I've been calling lower prices on DXY and higher prices relatively on the other markets, it is advised that you could be going and watching the live stream of last week on Tuesday. I've live streamed the CPI, and I did call the market before the CPI data come out. And you can go to the live stream and you can check it out by yourself. I'm gonna be attaching it in the description if you want to go and check it out. That's gonna be the ending of this weekly review. I hope you've found it insightful. Until I talk to you next time, be safe. Assalamu alaikum wa rahmatullahi ta'ala wa barakatuh.